Hello, thank you for joining us. This is a short explanatory video about the g4mma.com dashboard. We're going to go over the different features and what is it that we offer. So we land on our dashboard, which we are really focused on the S&P 500. You can see where the market is right now. This is the price where the market is right now. Since the open, the market is actually up, even though it's a down day. If you were to buy it at 9:30, market is up 21 points or 0.56%. But we were measuring since the close yesterday, so the market is really down 0.41%. A big area that we focus and we calculate is the gamma neutral level. The gamma neutral level is really to measure and understand when the market is in a long gamma regime or short gamma regime. Those market makers, those dealers who sell the options, the S&P 500 options, which is the most common options that are being used for hedging. When they sell those options, those market makers, they need to hedge their positions. And so when we are in short gamma regime, they hedge in both ways, negative, meaning they short the market. But when we're long gamma regime, they only do it when you're buying from them a long position, they hedge against the market. So when we are in short gamma regime, they hedge in both ways. They hedge negative, so it adds a lot of fuel, a lot of volatility when we are in negative gamma regime. As you can see right now, because the level is 78, and the market is at 37.48, market is under this, meaning we are in a short market regime by about 140 points, 150 points, more or less. It's that's substantial. That means that we're deep into short gamma regime. We have videos that explains more about that and how you can use that. Welcome to understand and check out those videos that we have. Then we have the imbalance up and imbalance down. The imbalance up and down is in millions of dollars, so this is really 28 billion. This is how much those market makers they need to hedge for movement in either direction. The number that you see here is for overall for the entire chain, all the expirations combined, and it represents the imbalance down and the imbalance up. It represents a 1% move of the notional value of the market. So if the market moves 1% up, they would have to actually hedge negative down, and if it moves down right now, they have to hedge also down 37 billion. So that's why there's a lot of pressure, down pressure to the market, because we're in short market regime. The call option interest, that's just how many call options are open. The interest is for the calls. There's a put open interest, how many were registered. This is the volume for the call. This is the put for the call. And then we can go down to our striking balance, which is really one of the cool features. You can see it total. So I can see the entire imbalance of expiration. This is where the green light represents where the market is. We can zoom in, we can zoom out, and we can select different dates. The green line here is where the market is. This long line represents where the gamma neutral level is, so we're very deep in that. You can see to the right there's not a lot of hedging, not a lot of gamma imbalances. Most of it is to the left of where the market is, because we're in short market regime. If we were to choose an expiration date, let's choose Fridays. Usually it's Fridays, there's more expiration of options. Usually Fridays, monthlies, and quarters. But you can see that there's, for example, at 3,700, if the market were to move down, this just explains if the market were to move down, whoever has this 3,700, they would have to hedge against the market. So that adds a lot of fuel to the market as it comes down to protect this the strike. So that's $636 million that they would additionally, if the market were to go down and get close to that 3,700 strike, they would have to hedge against the market, so it would add more fuel to the market to go down. If the market were to move from where it is right now, this position would be adding up 479 million, so that's good, that's positive up for the market. So that gives you a little bit of where the hedging or where the imbalances are, and it can help you to find a pin position, or where if the market moves in one direction, it's not going to tell you where the market will go, but if the market starts to go in that direction, where the magnets or where the market makers will have to hedge in order to protect what they have already, their imbalances that they have already Obviously, we're showing the open interest. This is for the expiration of Friday, so I can choose for any expiration available. This is just the open interest, call puts for Friday. This is the volume for Friday. Again, I guess this is more of information value purposes, but we still show that. Then we have the intraday realized variance, which is a way to measure liquidity. It does not measure liquidity directly, but it is very highly correlated with liquidity. So any number that is really above 20%, the higher that this number is, the less liquidity, and the lower that the number is, the more liquidity. Above 20%, not a lot of liquidity, very sparse liquidity. Under 10%, that means there's plentiful of liquidity. So at 17% or 18%, not a lot of liquidity. I would expect a very volatile day, because anybody who's buying, selling, because there's lack of liquidity, they could easily move the market. Again, we have videos that explain this, and for every asset, we calculate that for everything, and any stock that you want on your watch list. There's videos that explain how to measure and how to correlate that with liquidity. Control chart is a way that we can measure movements that are not normal throughout the day in the market. So throughout the day, it's really log returns of 1 minute of market moves. So anything that is close to the center, those are really retailers or small orders that really didn't move the market. But things that are away from the zero, from the mean, those were single large orders that really moved the market. So you can see today that there was at 10:25, there was a large order, a buy order. There was a 2.2 sigma. That's substantial. Another one at 10:48. And you can see the market really opened lower, and it's been going higher throughout the day. And that is because there were big, these two dots contributed. We do have some dots to the low side. There's a green dot over here that I think I saw one here. There it is. No, there's no. It's my mouse. There's one here at 1.7. So that's one dot. And this is another one. We can zoom in. We can zoom out. There's nothing on the bottom. And then we can do that. We have our sectors page. We have our indices page, where we have all the indices together. Then we have our sectors. So this is communication. You can see right now communication, it's down 2% today, and it's only 0.93 since the open. So since the open, it was worse when the market opened, pretty much. Then we have the striking balance. Not a lot going on there. We have open interest, option volume. Again, we have the liquidity, the control chart, and we have that for all the sectors that we're showing here. Let's look at energy. I believe energy is up today. So we go to energy, you can see right now. So it shows you a little bit more information. It's 2.18 up today. If we look at the imbalance for expiration for Friday, you can see there's almost for the 90 mark, 90 handle, there's almost the same down and up. 19 million, it's not a lot. 19 million, 19.9 million down, and 23, so a little bit more up. So there's a little bit pressure up. So the market moves up, they will have to buy more. So that might add a little bit more upside pressure to energy. It shows us here the realized variance, which is again liquidity, and our control chart. We have the same for the indices, so we can see it for all the indices together. The same page that I showed earlier is just a little bit more compressed. You have the S&P 500, you have Nasdaq, you have Russell, you have Dow Jones, and so on. I can go and create a new watch list. For example, I can call it, let's say, Tech 1, and I can add Amazon. I can add QQQ, for example. Then I'm going to go to my Tech 1 dash 8 watch list that I just created. And again, everything that I showed you would see it here. You can see what's the balance for Friday. That's for Amazon. You could see the balance up, the balance down. You can see the liquidity. So 48%, not a lot of liquidity. Again, we explain all that in videos and how to correlate that. You can see that there was a lot of dots down today, pressuring Amazon down in the beginning. Let's look at the Qs. Let's look at Friday expiration, and you can see that there's actually some interesting gamma up here. So the market where it is, it moves up. You can see that market makers will have to sell. So that will keep that strike. There's probably calls that they sold. They don't want to lose the money. So as the market gets close to those calls, they have to sell to protect their position. So it's 289 against the market versus 248 for the market. So that shows you the imbalance. So it's really cool about this. Liquidity 25%, not the worst, but not ideal. Ideal for the Qs would be under 15. And here you see the control chart. That's it. This is a really short video explaining the dashboard. We welcome you to ask us questions on our Discord channel, and also watch other videos that teaches us about different features that we have. Thank you very much.